Praveen, a warm welcome to this podcast. It is a privilege to have you from the
Thank you.
background of corporate sales, event management, and to a journey of an entrepreneur in last 5 years. You have learned a lot, I'm sure, during this period of your various experiences.
Yes.
As an entrepreneur in last 5 years, you know, what are the top three learnings that you would like to share with us?
Yes, Sachin, thank you so much for the inviting me for this podcast session. And yes, that's a great question. Asking a person coming from a corporate background of about 15 years and above experience in primarily service industry, where we've been always facing the customer B2B sector, or it could be B2B B2C sector. So coming from this kind of industry, the last 5 years of my experience as an entrepreneur, to some extent, was a bit comfortable, overall when I look at it, because I've always been facing customers. I've always been looking at giving good best services, exceptional services to our clients. That is something which I kept in my mind, and what I've learned over the period of time. And um, I started this journey. And initially, the challenges that I faced obviously was the keeping yourself positive. It's very important that being self-employed or being an entrepreneur, it's very important that we have to keep trying innovative methods of servicing our clients and giving them the best possible service. Obviously, because we have to be we have to be better than the other competitors who are there in the
Yes,
market, because we
yes.
have a huge competition. So that's not an easy task. So yes, being positive was very, very important thing.
Yes.
That is something which I learned. And again, having that consistency, it's very important that
Mm.
it's easy to get carried away when you see so much of success in the
Yes.
initial years when you be an entrepreneur. And COVID being a part of this journey in the last 5 years, COVID was a huge impact, for my business.
Yeah.
And keeping myself positive, like I said initially, and being consistent in approaching clients and giving them the services during this
Yes.
phase was a very great experience, which I will definitely cherish for the rest of my life.
Fantastic.
Again, third, very important learning that I had. It's very important that what is the kind of service you're giving to your clients. Now, is this service going to get some goodness, out of them, or some kind of satisfaction that you get when you're providing this service? Money is
Mhm.
not just the only factor. So in my domain that I'm in, it's very important that I actually identify the need of my client and give them what is suitable for them. And
Mhm.
when I see my clients getting that maturity amount or the return on investment that they have done, and they come back to me and they give me the feedback that they've got such a great result, and they were glad that they invested with me. So this
Yes.
actually gives a big satisfaction for me. This is the greatest reward that I can get from a client, and that actually keeps motivating me to continue driving myself to build my business and
Yes, yes,
scale up
Praveen. I
basically in
think this is
this.
this is very nice.
Yeah,
Good learnings, and you put it up in such a nice way. And I'm very glad that the third learning that you said, satisfaction. For an
yeah,
entrepreneur, satisfaction is the most important thing. And then when you say that, uh, being happy with the need-based planning of your clients and seeing them happy achieve their goals is such a satisfaction for you as a financial advisor. I think you put it up in a very nice way. Top three learnings: positive, ups and downs doesn't matter. You stay positive. Being
yeah,
consistent. You know, the COVID example was a perfect, example to this second learning. Irrespective of what happens out there, you need to be consistent. You should not just give it as an excuse saying that, oh, COVID hai, to my service, sir, accept kar lo, thoda low service. I think that's a good learning. So positivity, consistency, and satisfaction. I'm very closely, what I say, I'm very impressed with this last point of satisfaction, because as a financial advisor, I strongly believe that financial advisors should enjoy that satisfaction when they help a client. I think
Absolutely.
if you don't enjoy that satisfaction, you should not be in this profession. I think that's the core
Absolutely.
part. That's a core part of this profession, because as a financial advisor, insurance agent, mutual fund distributor, you come in customers' life as a very important value addition for them, and you have to be that honest and sincere and should feel for your client. I absolutely agree with that. Thank you, Praveen, for this very good input. We started well with this three amazing learnings from you. Uh,
Thank you.
did you really enjoy this 5 years? Learnings are one part of it, but are you really enjoying entrepreneurship?
Yes, definitely. Because see, at any point of time, you've always been challenged to perform. You have that kind of a pressure in terms of taking care of your expenses. You need to maintain your lifestyle as an entrepreneur. You cannot just cut down on whatever commitments that you have. So that is something which is always there. So we'll have to cater to our family and whatever requirements that are there that needs to be catered to. So it is very challenging. That's something which is it is always there, and that actually
Challenge
drives.
is keeping you happy.
And it actually, yes, it gives us
Kick.
gives me a push to
Okay.
perform better and grow. So it's very easy for us to get into a comfort zone. It's as an
Hmm.
entrepreneur, you should never be in comfort zone. You should come out of comfort zone
Absolutely.
at
I
any
fully agree
point
with
of
you.
time.
And a lot of advisors get into comfort zone after a particular income level, and they
Yeah,
feel that, okay, this I don't want to. They get into that comfort zone, and I think that is where the growth stops. That is where
absolutely.
the downfall starts. I heard this many times in the corporate world, that most of the companies collapse when they're into growth stage.
Yes.
I think that's something which is very important.
Yeah.
Fantastic, fantastic.
Yeah.
So, Praveen,
Yeah.
whenever I hear you talking, you are very clear about these two things. You always tell me that protection and wealth creation are two separate things. And you insist that those advisors who are only selling protection through life insurance and not helping the client for investment, or those advisors who are only focusing on investment and are ignoring the protection part of it, are somewhere doing a 50% job. That's your philosophy. I want to understand from you why you're saying that protection and wealth management should be offered by one single advisor.
That's a good question. See, when I joined this industry back in 2019, I underwent rigorous training on the overall holistic financial planning aspect, not specifically any product as such. So when I went through that, I came across a concept called investment pyramid. So this concept is used mostly across the globe by CAs and financial planners. So what it states is basically it's made of four stages actually. So the bottom stage is the foundation stage, which actually ensures that the pyramid is intact. Now this
Mhm.
bottom stage is protection. So your entire financial journey has got four layers in it. So this concept is something which I understood deeply, where the bottom is protection. It talks about the three Ds of life, which is your death, disability, and disease.
Mhm.
If that is not protected,
Mhm. Mhm.
the entire pyramid will collapse.
Mhm.
So the next stage is your investments, your mutual funds, and small savings accounts and things like that, PPF. And then comes your stocks, and then the topmost is your venture capital and real
Yeah,
estate.
the private
Those are
equity and other things,
those
right?
are yeah, those are the next level of investments. So what I've observed in India, traditionally, most of the almost 49% of our clients that I've approached, or as per the stats, they invest in FDs.
Mhm.
And otherwise, the other investment instrument that they look at is gold or real
Yeah,
estate.
yeah,
So these are the
yeah.
only three aspects that they focus on. So when I started doing this financial
Mhm.
planning
Mhm.
with my clients, so I made them understand that okay,
Mhm.
during this journey, you have planned events and you have unplanned events. Okay, so planned events are totally in your control. So that is totally in your control. You can invest, you can withdraw, you can actually diversify. That is all in your control. What about unplanned events? If something like that happens, and there are many examples to talk about, which we've seen post-COVID, a lot of celebrities have gone through that. So it's very important that that is taken care, because that is your base, or your foundation of your entire financial planning. And if you're not there, who's going to take care of the rest of the aspects? So maybe your spouse or your family members, your parents may not be as effective as you are in accumulating wealth. So it's very important to accumulate wealth. It's very important to create legacy for your family. At the same time, it's very important that you protect your income. Whatever is your influence, that needs to be protected, and it needs to continue in even if
to
you're
achieve
not
the financial goal. I'm very
absolutely.
glad, Praveen, that you mentioned that in your initial training, you actually didn't learn about the products much, but you learned about the foundation, foundation part of the financial planning. And I think that is the biggest value addition probably you got in your initial years. I think
Yes,
financial planning is the most important subject an insurance advisor or a financial advisor or a mutual fund distributor should learn prior to learning even the products, because that
absolutely.
sets the foundation. And I think that is very nice. This is exactly the learnings that are going to be useful for you to give a proper advice to your client. And your clients per se today and in future are not going to look at you distributing products to them basically, but you advising them. And I think when you stick to such principles that protection and wealth should go together, and then you insist on your clients that this should happen, in order to achieve your goals, I think you are doing a big value addition to your client. You may come across as a tough guy, and unlike the most common advisors that they meet, who are most often saying yes sir, yes sir, yes ma'am, yes ma'am, but you are there going and putting your point forth. I think this is the breed of advisors that needs to be flourishing and needs to be there in coming years. I think that's very nice. I mean, fantastic, right?
Yeah.
Uh, you were involved with some brand building activities in your past career. You were also part of a startup, and brand building for financial advisors, everyone says, is the most important thing. So, what is your view on importance of brand building for financial advisors?
Yes, this is very, very important as an entrepreneur. It's very important that you build your personal brand. You are not, if you are actually being identified through someone else. Okay, this person works here, this person works there. So that's not going to build your personal brand. Now, what do you mean by personal brand? According to me, it's very important that you need to stand out from the rest. So when you approach a client, first question that they have in their mind is with him, which is, what's in it for me? That's the
Yeah,
first
yeah.
question. Why should I buy it from you? I have hundreds of avenues. Yeah, you have online options. You have banks. A lot of banks are offering investments. So they have multiple avenues. Now, why should they take it from me? That's where the branding comes into picture. So branding, there are a lot of activities that I've been doing to build brand, which I've learned over a period of time in my corporate days. So very important. You should definitely give a value add. You are actually offering a service.
So now you are offering some tips on doing personal branding to advisors.
Yeah.
Okay,
Absolutely,
okay, okay,
absolutely.
great. Yeah.
So, that's again, that's the next part about, how you can build your brand basically. But, to sum up, you need to have a kind of a mechanism where you can take a feedback from the client. It's very important. We used to follow a method called Net Promoter Score when we are in our corporate. So this actually is a feedback mechanism which wherein the customer can give ratings based on the service that you provided. And this actually creates a very good, it gives you a series of feedbacks, maybe of a number of clients who have given you feedback, and it gives you a rating, just like you have the rating in Google for any company. So if you're close to 5 rating, that actually creates a very good, brand image. When you approach another client, a new client, and he sees your ratings, based on that, yes, they will get that confidence to listen to you at least, to give that option for you to come and meet them. So this is one of them,
Mhm.
which trust is something which is very important. This is how the trust is built, because at some
Yeah,
point,
you get reviews, you get ratings from the client. That's the most important part of the brand building. One of the things which clients actually look forward to
yeah,
validate your trust is the reviews and ratings from your previous clients.
absolutely.
Yeah.
Validating the trust, because we need to have something substantial, some kind of evidence that, okay, this person has given good service. Customers have been really happy, and there was no, mis-selling or anything as such. So building that trust is very important. That actually creates a great brand.
So you mean to say that every advisor should
Yeah.
have a mechanism to get reviews and ratings from their client, and should also ensure that a new client that they approach should
Yeah.
should see this reviews and ratings prominently.
Absolutely. So, I've been working with bigger brands, recently. Tata is one of them. I don't, nobody, has to explain who is Tata.
Yeah.
They have built a brand over a period of time. So, this is something, there's a lot of learnings that we can inculcate through big brands like Tata and many others. It's very important that after sales service, or the value addition should be at the top of your priorities when you're approaching your clients.
So, can you give some actionable point here? If at all you can make it more specific from how you do it for your personal brand. If you could just give one or two inputs here, for financial advisors who are listening to you.
It's very important now in this age. It's a digital age now. Uh, the good part about that is we are able to approach thousands of clients or millions of viewers in just one click of a button.
Yes.
So utilizing the digital platforms is very, very important. Highlighting each and every achievement of yours in LinkedIn or in Facebook or Instagram. So we have Meta, which is actually introduced by Facebook recently. So there are so many digital platforms which can actually highlight your talents and your acquisitions. Let's say if you acquired a big business, MSME sector where you actually acquired a business insurance model. It's very important that you start telling a story about it, how you started it, how you closed it. So if you're able to put that across in a nutshell in the social media, that is definitely going to build a huge,
So what you are
trust.
saying, create content around your personal experiences, personal achievements.
Absolutely.
Share stories so that it can get inspiration. It can be inspiring for others, and that itself becomes your genuine content.
Absolutely. And very
So
important to
creating
have
content is very important for branding. I
creating
agree with you.
content. Absolutely, because now it is more of video communication. Nobody's going to read if you're putting a big story.
Yeah.
So nobody has patience to read. So recently, I've actually been exploring in the social media. LinkedIn is going to introduce total video communication platform very shortly. So when the world is moving towards video based communication, that actually creates a big impact. So I think that's where we need to start shifting ourselves and start collecting video testimonials, not just the feedback. Like I said, NPS is definitely very good. Yeah, that's to start with. But getting a video testimonial from your client with their the kind of value adds that they've got and experience that they've got is very important, because the journey needs to be explained.
Yes.
It's not how.
Yes.
Yeah.
And it will have a bigger impact if you're just sharing a video, to a new client or a new prospect, saying that just share what is my, one of my client is saying about me.
Absolutely.
And it becomes more genuine. Yeah.
Exactly. And yeah, maybe a couple of claims that we've because I've got more than 500 clients in specifically in the insurance domain. So if there are claims that have been settled, so I think you should not miss that out, because every out of maybe 1,000 plans that you have sourced, maybe one or two will be claimed. So even that one or two claims needs to be captured, because the satisfaction that the customers got because the claim is settled has to be displayed to your clients across in social media. That's very important. Creates a good impression.
Tell real stories about your work in form of video content on social media.
Yeah, so we have a mechanism wherein every claim that is settled, in our insurance domain, we get a branded message from
Hmm.
our company with their brand, with their logo and things like that, saying that this is what claim was settled by
Hmm.
Tata, or it could be any other company,
Hmm.
and my name and my
Hmm.
company is mentioned, who actually sourced this plan, and the customer's feedback is mentioned. So this is something which is currently going on, which I'm getting help from the other lot of other companies that I'm dealing with. But otherwise, what I do is I personally go and talk to them and record their feedback. If not video, I mean, I have audio recordings wherein the customer has gone through the entire process of health claim, the ordeal that they've gone through, and how
Hmm.
I have given them, a resolution over a period of a week's time. So the entire feedback has been captured. So every time there is a claim settled, or every time there is a maturity amount that needs to go out to customer, or every time a customer claims or withdraws from his mutual fund account, I ensure that I ask them the feedback. I ask them what happened, how has their investment been, the journey been, and this is
So, so,
captured, and
so
this actually creates a very good brand.
so there are those touch points that you have identified:
Yeah.
claim, redemption.
Yeah.
Try to get the feedback when you have really done a good job. For a particular thing. Those are touch points, customer touch points, I could say, where you touch
Yeah.
for so make it more specific. Have videos, uh, uh, publicize that. Try to have a publicity on a social media platform.
Yes.
Create content, tell your stories, especially where you have settled a claim or something like that, and look for those touch points. Basically, during that time, there are more chances that the customer would be happily sharing the review or giving a testimonial to you. I think that's
Absolutely.
fantastic. Uh, do you really, one more thing that was coming to me, I was just a little waiting to ask you this, while you were talking about your company and other thing. As a financial advisor, uh, what do you think? Uh, Building your personal brand is important. Uh, Saying that I'm an individual, irrespective of the company that I'm associated with, right? Or building your brand under the company that you're working for or you're associated with. You might be associated with multiple companies. So what is important? Like, should your brand be below the main company brand, or an advisor should have a brand which is independent? I know it's a controversial question, but I think it's you need to give us some input or your feelings on it.
No, see, it's very important that you need to have a personal brand. It's very important because in our field, the options to customers are tremendous. They have multiple options. They have multiple avenues. They can directly go and approach the company and take the plans what they want. But it's very important that we as financial advisors create our own brand,
Hmm.
because we have that freedom of personalizing things. We can personalize uh, certain solutions as we're meeting them face to face, and we are actually representing different companies, but
Hmm.
that's secondary, that we're
You're,
representing them.
although you're representing different company, the personal guarantee is yours.
Exactly.
And what
Exactly.
customer
So
is looking for is the personal guarantee, because a company might not be able to pass that message quite clearly that I am personally giving you the guarantee. But when an advisor is there, an advisor is giving a guarantee that is much higher or in a much committed level, because it
yeah,
is his personal guarantee, and I think that is something that customers won't get anywhere else. And
absolutely.
yeah, okay, I mean, good. I mean, it's a
See,
nice thing to.
I just want to add, there was an incident recently where a customer had bought a plan from the digital platform, Policy Bazaar.
Hmm.
Uh, when he approached my branch recently, he was actually he was very aggressive, and he was not very happy. He was reaching out to the operations team who were there, who were basically facing the customer, and they were not able to handle him. So I noticed this person, and I took him inside discussion room, and I asked him what was the issue, and I introduced myself. I gave him my card, and then when I spoke to him in a very polite manner, and I tried to understand his point of view. He explained this is what he was missold online, and he's trying to reach out to them through the call center setup and things like that, and nobody was giving a right response, because the person they spoke 3 months back initially was someone else, and the second or third time they're calling, they're speaking to another person. So
This is the
he has
reality.
to tell that he has to tell the entire story from the beginning
Yes.
till the end.
And this is a
And
reality. This is a reality, actually. This is happening
yeah,
across. Although
yes,
it's quite an exciting thing to go online and do it yourself. Okay, that
yeah,
that kick you get as a customer in doing it yourself is amazing. It's like a gambling. You can always get a kick when you do that gambling. But is gambling right, or is gambling going to help you in your life? That's a question you
yes,
need to ask. Probably,
absolutely.
the right example that you gave, like those employees whom you spoke 3 months back is not there. Okay, the call center number, simply because they're all into employee mode. They themselves are not sure where they're not going to retire in that company, and the company knows it, the employees know it, right? It might be
Correct.
banca assurance, or it might be an online platform, but an advisor is committed. Advisor is
Absolutely.
committed with his personal guarantee, and will be there to face everything that the customer says if the service fails. Their customer also would definitely have this option to hold someone responsible for a bad service or a good service. On an online platform there is no one, and there is always this confusion to and the poll keeps shifting. Yeah, this fellow, that fellow, sir आपने अच्छा information नहीं दिया, sir आपने time पर call नहीं किया, oh that fellow did mis-selling, company is good. I mean, they will have hundreds of reasons, but when it is an individual advisor, जो भी है, it is between you and the client. There is nothing else. So I think the personal
Absolutely.
guarantee that there is huge, and I'm glad that you gave this example. I think this, if advisors are listening to this, uh, I want you guys to pass this message to all your clients, wherein they are today. I'm sure there are other brands which are doing, especially the your competitors like the banks and the online platform. They are doing their branding, saying that advisor is not good for this reasons. You as an advisor also should give reasons why you are good and why they are not good. I think that's that counter rebranding has to happen from they're
Absolutely.
actually trying to marginalize or make the individual agent's brand feel very small. I think individual agents should also try to tell out the fact, like you have just boldly said. I'm very glad. This is a very important thing coming out in this podcast. I'm very glad.
Absolutely. I want to add one last thing,
Yeah.
on the same lines. When you're actually customer facing, when you're actually the one single point of contact to customer, it keeps you on the toes all the time to ensure that you improve your knowledge. You have, all the knowledge about the product that you're actually putting across to your client. And you should not missell,
Hmm.
and you should ensure that the right information is given. So it keeps us on toes.
Yes.
Okay,
Yes.
so that actually gives a confidence to customer.
Yes.
That okay, fine. This guy is a single point of contact. So why will he lie if
Hmm.
he's selling something? So
And he's
they will
not in
have that
employee
kind of
mode.
trust.
You're right. I know an individual agent is not in the employee mode. It is not that he just has a target to sell and he's going to run away after he sells.
Correct.
Unlike an
Absolutely.
employee. I think it's a good message to customers also,
Yeah.
who are watching this video, which will actually make them logically think why an advisor has to be chosen over any other virtual help and support that you think is more like more branded well, or something like that. That you get a pull because they're branding that service much better. Okay, so it's time that advisor also start branding their services, right? Fantastic. I mean, this is a very big value addition. If advisors are watching it, I'm sure this will inspire a lot of them. Praveen, being your own boss, is the most difficult thing. Okay, and especially because there is no one to motivate you. A boss or
Yeah.
a leader, one of the things that they do is to motivate you. And also, in absence of someone to mentor you, guide you, or to uh, take your reporting, uh, you don't have anyone to do that. So how do you actually stay organized? Staying organized is a big challenge for individual advisors, because they are their own boss. So sometimes you tend to get defocused. So how you are managing your or organizing your day? If you could just share some inside tips from your daily routine.
Yeah, so this is one of the aspects, time management, or driving yourself is a big challenge which I've observed in advisor industry. So when I left my corporate world and I joined the entrepreneurship world, I did have these challenges because I don't have to report to anybody. I don't have a boss, so I had to be self-driven. I had to be self-motivated. So initially there was some comfort zone. Initially I saw a good success and I was in comfort zone. I was not organized. So over a period of time, I started. Focusing on being consistent. Like I said earlier, for us to be consistent, we have to put the effort consistently on daily basis. So we may have a goal, we may have a target to achieve at the end of the year, but we need to break it down to monthly, and fortnightly and daily goals or quarterly goals, right? So it's very important that we have a daily goal. So what I've done basically is I've planned my day the previous night, before I end the day, before just after I finish my dinner, I try to have my dinner early in the evening. And I spend about half an hour to 1 hour looking at how the day went and how we need to plan for the next day. So I divide my day into three parts basically. The first part of the day is where I look at clearing all the pending work, whatever pending work that I had for the previous day or the previous week, and following up with other departments, or maybe following up with the clients. So any pending work that is there, that is addressed. And I spend about 2 hours every day on learning. It's very important that we have to keep learning, keep upgrading ourselves.
Fantastic.
I listen to the top financial planners across the globe. So I'm a part of MDRT group as well, which is one of the top 1% of global advisors. So I have a mentor in the MDRT club. So I have meetings every fortnightly with him. Otherwise, I keep looking at videos, or I do trainings. So we have a lot of trainings on upgrading ourselves on securities and on PMS and stocks. Stocks again is a huge. It's a big ocean actually. We have to keep learning and keep looking at which companies are doing good. What are the points that we can discuss with our client in terms of stock market. So 2 hours every day I spend on learning. And the second half of the day is where I look at acquiring new clients, because client acquisition or customer acquisition is a major part of our role. We have to keep connecting with new clients. We cannot just rely on the existing clients that they want to come back to us. Yes, they are very important. I'm not denying that. But at the same time, it's very important we keep adding new set of clients and adding new set of
that's a growth part of the business. You're right.
Absolutely.
In
So
fact,
that actually that is your fuel. In fact, that's the raw material. The prospecting aspect is the raw material for us. As much as possible, we have to create the reference market, and the open market needs to be approached. So second half of the day is that.
In fact,
that's how.
In fact, similar to what you said, a lot of top advisors, top professional advisors in India, whom I have interacted with, have a similar setup of day. They do this common thing like what you have said. They invest their daily time in some learning. Every day they want to upgrade themselves. They always plan their day the previous day, not as it comes. And I also see that most of these advisors have actually dedicated slot or dedicated time to do new business development. A lot of them, they either make new calls, or they just go and organize some activity wherein they could go and meet new clients. But they put in deliberate effort continuously to on a daily basis to acquire new clients or to meet new clients. And learning is also an important part of them. I think this is something, it's coming like a secret formula and most of the successful advisors are doing this. So I think this has to be replicated by each and every advisor without even giving it a second thought. Yeah, but
Absolutely.
there is a lot of correlation and there is a lot of similarities, among the top professionals, financial advisors in India, and they exactly do the same thing what you told.
And just to add one more point, that we should not limit ourselves to approaching clients individually, or daily basis. Yes, we have to keep doing that. Or maybe the HNI prospects, where we need to give them individual attention. But at the same time, what I do on a monthly basis or a fortnightly basis, I conduct an event or an activity, which again gives me an access to a larger customer base. So it could be in an apartment, or it could be in the exhibitions that we have, where I try to give free consultation, or a financial literacy, or a investment awareness program, where I'm able to attract a bigger crowd, and reach out to them eventually during the course of time, basically. Yeah.
Uh, I remember you telling me, Praveen, that people should start retirement planning as early as 30 years. Yeah. And I know you're very passionate about retirement subject. You are one person who does a lot of research, and you are one person to go to if at all someone needs to know about retirement planning. But people at young age are not very keen to start early for their retirement. So, what are your tips to them, or what is your reasoning for these young people that they should start early for their retirement? What is the importance of retirement in everyone's life?
So that's a very, very important point, and people, especially in India, slowly they're actually understanding the importance of retirement planning. But if we go back to the previous generation, the millennials, we are millennials actually, maybe our parents, it's actually been there in the blood. They haven't done retirement planning during those days, because they mostly were working in a government sector, or public sector, where they're already getting a pension. The pension scheme is already set by government. So that is a mentality which they had, that, okay, anyway, government is going to take care of retirement, so I don't have to focus on that. So the same mentality, was inculcated for the next generation. And maybe millennials are a little hard nut to crack, but the next Gen Z or Gen Alpha, I think what I've seen is they've understood the importance. It's very important, because if you break it down to understand what exactly is the importance of retirement planning. Now, on an average, a person works till 58 or 60 years. And the average life expectancy in India is around 75 to 80. So now you're retiring at, let's say, 55, and you're living till 75. You're actually not earning for these many years, almost 20 years of your old age. You're not getting paid. Now, at that time, you either need to depend on your children or your relatives, or you will probably need to have some sort of assets where you're getting the rental income. Now, for a conventional salaried employee or a corporate employee, they do not have time to manage assets.
Yeah.
They getting a house itself is a long time investment for them. 20-25 years of their entire career, they end up paying the loan. So traditionally, for people who have been working in a salaried sector, they used to get pension. Now that they don't, they need to start adopting themselves. So it's very important for us as advisors to make them realize that they start early to save, because we look at the target retirement corpus that they need to get. It's here, and this is 60. Now they are at 30 or 25. So if you see the ladder, if you just picturize this, the ladder is this way to reach the target, and it's very easy for them to climb, because
then in the later stage it becomes steep like this.
It becomes very steep, and it will be very difficult for them to climb. So it's very important that they start investing early, start looking at keeping a corpus in mind that they need to accumulate by the end of 60 years of their age, and start planning accordingly. So it's very important, and they don't have to depend on someone else, their family members, and they're independent at that age.
You rightly pointed out, I think, the point that you mentioned, that you either have rental incomes through some properties and assets. But at old age, you don't have the energy, you don't have the you know that finesse to actually manage a physical asset.
Yes.
There are a lot of chances of you getting cheated, or someone just doing some fraud, and not rents not coming on time. At the old age, you don't have that energy, and you don't want to get into uh, any sort of disturbance. So
Yes.
physical assets are good, but everyone, as you say rightly, I think you rightly said it, should have financial uh, products that will help them for passing through the retirement age much smoothly and with dignity. I think this is a very valid point. When people say that I have a lot of money, okay, I have these assets, and I'm going to retire on the basis of that asset. It's just fine. Asset is your wealth, and it will definitely do well for you. But a continuous pension that comes through financial products will be the game changer for you.
Absolutely. Financial independence is very important. Not at the cost of you chasing the money, like you said, chasing the tenants, sorry, the
Yeah. The rents are not paid
tenants.
on time, and there are
Yeah,
a lot of things you don't know what happens. When you like, I've known some of the people around, like they have assets, but their kids are fighting over those assets, and they want
absolutely.
to dispose it off, distribute the money. Uh, all that is fine. It's a wealth that is at risk at some point of
Correct.
time. But a pension coming through a retirement plan, through an annuity plan, would be a different. Would be the game changer, or would be giving you that stability. And in the retirement age, you need to be with at least 80% stability. You can take 20% risk here and there, but 80% things have to be more stable for you, because you're no more young, and things are different that time, right?
Yeah,
I think that's right. You made a very valid point here, logical and emotional. Okay, and I think
absolutely.
that's why they call you the retirement expert, I believe.
So peace of mind is very important at that
Yes,
age.
yes, 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 yes. Fantastic.
Yeah.
Right. Praveen, you gave a very nice explanation about retirement. Uh, Also, today one of the tool that is becoming very popular for building retirement is SIP. And I know you are also a very big advocate of mutual fund SIP. You say that it has to be compulsorily there in everyone's portfolio, a mutual fund SIP. Why do you say that?
Yes, see, this is something which I've actually realized about 3.5 years back when I actually took up the AMFI license for mutual funds. When I went through a training, the very, very important aspect is for any individual, emergency is something which can come to anybody. Okay, so it could be medical emergency, it could be financial emergency, it could be it could be maybe educational emergency. Maybe he needs to pay fees or any kind of emergency. The cash flow has to be there at any point of time. The customer or an individual need to have money invested. The money needs to work for him. At the same time, the same money needs to be accessible.
Hmm.
So the retirement solution, or the traditional plans that we talk about in the insurance domain are mostly long-term investments. So we get this objection initially when I joined insurance industry. These were the objections that I faced from our client, that what if there is some emergency? You're not going to give me money at least after 15 years or 20 years. You're asking me to wait. You're asking me to invest and wait for 20 years for the maturity. What happens if something is some amount is required in between? So taking out money from the insurance product is not going to give them good results. We have option to take out loan from the existing invested amount. There is a surrender option, but that's going to take them into loss. So mutual fund is a product which is a very, very flexible product, SIP for that matter, where a person can start from a minimum investment of 1,000 rupees, which is absolutely not a big deal for anyone at this stage, whether it's a corporate individual or someone who's actually in the
Self-employed.
labor class,
Yeah.
sector. It caters to all, classes
Yeah,
uh,
1,000
of
rupees
people.
is possible for everyone. So I think
Absolutely.
that's the
So
mission. At least
yeah,
1,000 rupees in SIP. If you are on zero, 1,000 is better than zero.
Absolutely. And it's as good as savings account. People don't understand this, or maybe they're not aware of this. That's where we need to spread awareness. You're keeping money in savings and you're getting around 2.5 to 3%. At the same time, the same features are available in mutual fund where you're putting money, you can take out money at any point of time. Nobody's going to ask you. So that flexibility is that you can actually put more money whenever you're getting incentives or your bonuses that you get from your office. So you have the flexibility. You can monthly invest it, or you can do as a individual single premium investment as well. So that flexibility is definitely there. And the money grows at a very fast pace. Currently, it's on an average giving around 15 to 17% returns. Okay. Anyway, anything which is giving more than bank rate returns is definitely a go for it. I would say go for it. And now this investment in mutual fund is beating inflation comfortably by 6%. So
Yeah. And then the present instrument, earlier days, yes, of course, the say, FDs and all, you were giving you good returns. They were beating inflation by default. But today, inflation is beating them. So sticking to those old, instrument is not a wise decision. I agree with you. I fully agree. And SIP, I also strongly believe that should be there in everyone's portfolio, compulsory. It is also a habit that you are maintaining and building over a period of time of regularly investing some money, some portion of your income every month. I think that's a good wealth management habit as well.
absolutely. See, earlier, just want to add one very important point. People were very skeptical about investing in mutual fund because there was definitely volatility and they were not sure. Obviously, the returns are not guaranteed and they were not sure whether they will be able to beat the bank rates. But now the industry has evolved. The fund management is managed in a very, very structured way. There is a centralized body which actually does the rating of all the funds. Okay, and there is a benchmark which is kept. So Sensex or Bombay Stock Exchange basically is the benchmark for all the mutual fund houses. They always look at that and they ensure that they give returns at least 3 to 4% more than the Sensex. So on an average, Sensex is given about 12.9% in the last 40 years. That's the average CAGR of Sensex. And most of the mutual fund houses are giving returns of more than that. So now they have the pressure to ensure that they give returns more than that. Otherwise, the ratings will go down. So they are just like a civil score for an individual. When you go and apply, someone checks your civil score. Similarly, there are credit rating agencies which rates the funds. Okay, so now it's not an not an unorganized approach. The approach is very, very
Some of the
organized.
most trusted brands are doing this. I mean, right from the bank that you trust, the biggest bank that you trust to the biggest corporate house that you trust, all are there in this field. So there is a good amount of trust in this particular segment of wealth creation. And I believe strongly that yes, everyone should look at this instrument in their portfolio. Now, the most important question, I believe, is like I know you do a lot of financial goal planning for your clients. What about your personal goals? Can you just share something about it?
Now that's a great question actually. So personal goals in terms of my career as an individual entrepreneur, yes, I want to reach. I have a vision to reach every individual that I know or that I come across, every acquaintance that I know, and educate them. If not, source of business from them, at least bare minimum educate them about how important is financial planning and give them the importance of planning your finances well in advance, planning your retirement. That is my main vision, to ensure that everyone is made aware of it. I have a plan of giving financial education sessions to children in schools. So this is something which I'm actually in the inception stage. I'm still thinking about it. So I've spoken to a couple of my friends who are actually into education sector. So because this is not a part of our schools now, schools and colleges don't talk about financial literacy.
Yeah.
So I think that is something that's actually the next level. That's something we have to think because that's going to be futuristic. It's going to be one of the important aspects in financial planning. And I'm sure big players are going to get into that. So
No,
before
you are
that,
absolutely right. In fact, they like teach you to become an engineer, a good engineer, and basically you want to become a good engineer to earn money.
yeah,
But they never teach you how to manage that money. They
Absolutely.
teach you to get ready and prepare to earn money, but managing that money is more important than just earning it.
So the society is teaching an individual to become a money making machine,
Yeah.
but you have to make the money work for you. That is
Yes.
something which they need to understand.
Yes.
Yeah.
Now, this is a
So
very noble goal that you have of imparting education to young children, especially in financial literacy. I think this will actually shape up or help to shape up a lot of young lives. I think I really wish you all the best for that. That's a fantastic initiative, Praveen.
thank you, thank you.
In
So that
fact,
is my goal. Maybe more or less, I think that actually will give which it'll actually create a new generation altogether. Because I've seen a lot of my clients who've just started working, and they've actually focused on getting a term plan to start with. So people are getting they're aware now. They're much more aware than before,
right.
and I think that awareness has to start from the young age for children.
Yes, fantastic. In fact, today in this last, 1 hour plus, that we are talking to each other, uh, Praveen, there is so much of realization that I personally have got. When you talked about being an entrepreneur, self motivation, when you spoke about having a daily routine, a fixed plan of working, in an organized way. When you spoke about the retirement planning and the fine aspects of retirement planning, also about the habit of mutual fund SIPs, and this amazing goal that you said you have of educating or imparting education to young kids. I think today's session was really enriching for me, and I'm sure it will be enriching to all the audiences that are going to watch you. And this podcast was basically, for me it was it was quite revealing in terms of seeing the Praveen that I know much more deeper and much more at a different level altogether. I think this was an amazing experience for me, and I'm very happy that you came in here. You shared your view openly, shared your view so bindas and honestly, and I really thank you from my heart and from the entire FINERGY team. Thank you very much, Praveen. And I'm sure this podcast is going to add a lot of value to clients who are watching and to also financial advisors who are going to watch this. Thank you so much, Praveen.
Thank you so much, Sachin, for inviting me. It's really a great pleasure, and thank you for giving me this opportunity to talk about my experience. And it's a great platform that we are actually associated with, and definitely this is going to go a lot ahead. In our partnership, actually.
Yes.
It's
Thank
going to be
you.
great.
Thank you, Praveen. Thank you so much for your time. It really means a lot for us. Thank you, Praveen.
Thank you.
Thank you.
Good night. Good night.
Yeah, good night.